everyone, to the Australian Bitcoin podcast. In this episode, you're listening to myself, Justin, and Daniel from Hardblock. Today, we'll be discussing recent global and local Bitcoin news. But before we start, a quick word from our sponsor. The Australian Bitcoin podcast is brought to you by hardblock.com.au, Australia's first and oldest Bitcoin-only exchange. Hardblock aims to help their users save in hard money and to become self-sovereign Bitcoiners. Hardblock has no added fees on deposit, buy, or sell transactions, so the prices are what you see, are what you get. Sign up to Hardblock today using the discount link in the description below to receive free auto-send batched Bitcoin withdrawals for 6 months. All right, Daniel, how's it going?
Yeah, very good, Justin. Great to be back. I haven't been on for a while.
I know, we have to get you on a bit more.
Yeah. I was on holiday in April, as you know. Went to Queensland with my family, so we went for 3 weeks. So that was very good. And then on the next episode, you had Jeremy on. So now I'm back.
That's it.
Yeah.
It's good to, I think, get out of the state while the borders are a little bit looser than what they have been in the last couple of years. So good to get a bit of holidaying in.
Yeah, that's right. Yeah, it was good to have a bit of a break. But yeah, I'm now back at work, and yeah, we've been working at Hardblock, as you know, working hard, and we've had a lot of people ask us about becoming an affiliate. So we completed that, and we have an affiliate program. It's still kind of in early stages. We're still kind of, I guess I would say, kind of in beta stage because we just released it. But yeah, it's working now, and we have some affiliates, and yeah, that's going well.
Absolutely. What is the offering to affiliates? As in what's the incentive for them?
So I think you probably know this better than me.
I do. I'm just playing the role of the interviewer.
I believe I'm just trying to remember. So I think we do 15% of the half spread.
That's correct.
Yeah, that's correct. Yeah.
And if people sign up with an affiliate link, like if they're the referee, I guess you would call them, they get 6 months of free batched.
That's
spend,
right.
Like
yeah.
The auto
So they
withdrawals.
get free with batched free withdrawals for 6 months. So there's an incentive for the person who signs up, and obviously there's an incentive for the referrer. Yeah, we've had some customers start using it. Some new customers come in with the affiliate program. We had some people, most people were happy, but we had some issues with the digital ID, the sign-up process. So some people were a bit confused when trying to complete the verification. And so we're looking at changing from digital ID to use a different service to just kind of simplify that. And that's something that Bitaru has done recently also. So I think we're going to change that probably later this year.
Yeah, that makes sense. I think my perspective is the digital ID, which is associated with Australia Post or even managed by Australia Post, seems like a good system, but they probably could have chosen a better name than digital ID because there's a lot of connotations attached to that. So it makes sense just from like a perception. And if people are having trouble, with the features that it has in and of itself, it makes sense to expand it out and do something different.
Yeah, I mean, the digital ID, it's an unfortunate name, but it's not really like the over-verification systems on other exchanges. They don't use digital ID by Australia Post. They actually use the same system. Digital ID behind the scenes works the same like over other verification system. It goes to the government database and verifies if the ID document you provided is correct. So behind the scenes, it all works the same. It's just that
it's like a different skin on it or something
it's
like
a different
that.
skin and the Australian Post has named the service digital ID. So some people kind of are a bit turned off by that name. But yeah, that's been going on. And something else I wanted to mention was it was the Bitcoin BushBash, and we were there earlier this year. I think it was in March. But now there was a new Bitcoin BushBash scheduled for 30th of July. I believe it's July.
Yeah.
July.
I think 30th and 31st of July.
30th to 31st of July in Yeppoon, which is in central Queensland. So so maybe you attended your first BushBash before. So how would you describe it?
Yeah, it was amazing. It was like a Bitcoin meetup on steroids, because it's all the hardcore Bitcoiners that have traveled, a minimum of 8 to 12 hours to get there most of the time, unless they're smart and caught a plane. But I think there was some issues with plane rides and stuff at that point with borders. But otherwise, yeah, it was great. It was good to just get there and know that everyone has an assumed level of knowledge. Everyone's there to talk about the right kind of things. No one's really there to talk about shitcoins. Everyone was kind of very much on the same page in terms of, I guess, the state of the world in terms of things like inflation, a bit of government overreach, and that kind of thing. So yeah, it just felt like being with your tribe, which is a really nice experience.
I think I think it was Bill from the BushBash mentioned that it's kind of like going to the BushBash. There's a proof of work. Like you have to put some work in to get there, because we're all in these very regional towns a bit for us. So you have to put some work in to get there. So, and everybody who comes up done the proof of work. So it kind of raises the bar on the type of attendees.
Definitely. Yeah, I felt that for sure. And yeah, it's not quite the same. Like when you go to, because there was a recent meetup here or conference here, like the crypto roadshow, like that's all just crypto stuff. I didn't attend that. I was thinking of it just for the sheer sake of what's the word? Like seeing the sort of the spectacle of it or something like that, but I didn't go. But even sometimes you go to the Bitcoin meetups, the local ones, and there's a lot of people there that are like, they're not sure about Bitcoin, or they like Bitcoin, but they really think this other coin is going to be the thing. You don't get any of that at the BushBash. Everyone's there. It's the same kind of vibe. And I think being a Bitcoiner can be sometimes a bit of a lonely place if you don't associate a lot with other Bitcoiners in real life in meet space. So it was really nice to be in a room of like 35 other like hardcore Bitcoiners that just get it. And even some ranging from people have been there since the very beginning. Some people have been there just for a few months, but like everyone kind of groks it on that really deep level, which is a really good experience. So anyone who hasn't been to a BushBash, or even if you have been to a BushBash, check out the one coming up in Yeppoon. I'll make sure I link like the BushBash website and kind of the noteworthy Twitter handles and stuff so you can follow for the information if anyone's keen. No worries. Well, we'll jump into the news. So we'll start with global news today. More inflation numbers have come out. Probably not surprising to anyone listening to this podcast, but they're still high. So the United States annual CPI as of April is now 8.3%, which is very, very close to the 40-year high that they recently broke when it was 8.5% in March. Now, the United Kingdom annual CPI is at 9% as of April as well, which is a 40-year high for them. So this is, I think this is going to keep going up and going to stay at these levels for a while. But I found it sort of funny that with the US numbers, a lot of the politicians over there were talking about how, inflation's coming down because it went from 8.5 to 8.3. So this is a reason to celebrate. And to me, that just doesn't make a whole lot of sense, because unless we're trying to celebrate the small wins, because it's kind of like the metaphor for me is, if you're going 85 kilometers per hour in a car and then you slow down to 83 kilometers per hour in a car, sure, you've slowed down a little bit, but you're still going 83 kilometers an hour in a car. So you wouldn't do anything, risky in that situation. So the fact that we're celebrating a small decrease in the rate of increase doesn't make a lot of sense. Like for this to ever go back to how it was, we'd need to be like negative 10% inflation for several months at a time, for several years at a time. So not really reason to celebrate, but politicians over there are celebrating that they've done a really great job at bringing it down.
That's what makes a good politician. You have to always spin things in a way that benefits you.
It's very, very true. And look, they're not alone. I think we smash the US a lot in terms of their inflation, because it is probably one of the highest. Australia is at I don't actually have Australia's numbers here to report on. We reported on it last time. It's around 4% or something. But interestingly, New Zealand's having their own trouble with inflation, which is closer to home. So their inflation at the moment is 6.9%, which is a 30-year high. And interestingly, the government has decided to fight this, what they're calling an inflation storm, by using another $1 billion of New Zealand dollars in a spending package to give out essentially like inflation band-aids to a lot of their citizens. So it's something like $350 over the course of 3 months beginning in July, targeting half of all adults who earn less than about $70,000. There's also other things in there in terms of trying to reduce greenhouse gas emissions, boosting defense funding, and even things like increasing health spending. So that $1 billion is not just going to citizens directly, it's going to a lot of other stuff that the government's prioritized too. However, I guess probably the point that we'll both land on is the fact that you can't really get rid of inflation by printing more money and putting more money in the economy, whether it's for defense, greenhouse gas emissions, health, or directly to people to help them pay for the higher fuel costs or food costs. All that does is it introduces more money into the economy without more value, which means the money gets worth less, things get more expensive, and inflation becomes another issue that they need to spend $2 billion perhaps next time.
Yeah. I mean, looking at the headline that we have here, it says New Zealand hands out extra cash to fight inflation storm. And you, like reading that headline, I mean, I guess everybody else is probably thinking it feels like, to fight the fire, we're throwing more wood at it.
Yeah.
I mean, it seems very crazy. And, it's so like silly. And, if I look back at kind of in history, sometimes you see these things in history where you look back and things like, how did these people make such a silly decision? Like you look at, for example, in China when they were doing during the Great Leap Forward, when they were trying to produce steel, and if you read about that, it seems like so incompetent, so silly. It seems like so obviously silly that it wouldn't work. Or like, even Soviet Union where they, people, there were shortages and being produced, there was inflation, they produced price controls and there were shortages, and like all these type of things you look at in history and you think like, how were these people like doing these stupid decisions? And you was like, how could it, like, what was going through those societies, like, but they're kind of like, so it's obviously silly and stupid. And reading this, you kind of get, okay, well, it's happening in our society. This is obviously silly and stupid, but it's happening. So yeah, I just wanted to kind of add that.
It's very true. Like I've read, what have I read recently? So Anatomy of the State, which is Rothbard, and then I read The Road to Serfdom, which is Hayek, and I've read Economics in One Lesson by Henry Hazlitt. So anyone who's keen to know about Austrian economics, those are 3 books to definitely read. Yeah. But they're written anywhere from like 1910 to 1930, and they literally explain exactly what's happening in terms of things like inflation, where they say, well, look, if you implement things like price controls or subsidies or price ceilings, what you end up is with higher prices and then shortages. And when it's things like fuel and food, which people need to live, that doesn't just lead to higher prices and shortages, it leads to people dying. But at the same time, we knew this 100 years ago, and there's books written about it, there's evidence in history, and of course this goes back more than 100 years, but at the same time we're falling into that same trap. I say I think we'll do it very differently, but government is falling into that same trap. On your point about like how silly this sounds, I think they've used like very emotive words to say like we're going to fight the inflation storm, rather than saying, hey, this is a problem that we've kind of gotten ourselves into, and now we need to take a really hard break from printing more money, and even though it's going to be difficult, like no one wants to talk about that. That's not the narrative. So instead it's like, we're going to fight the inflation storm. Like, people hate storms and they love fighting, so like that'll get people to understand what's going on. But it's like, it's not an inflation storm. It's not just going to pass like a storm. You can't just fight it like you fight something else. So very, very silly, very frustrating. I feel like Bitcoin is almost the only ones in the world who kind of really get this, or maybe gold bugs as well have sort of been saying this for a while, but the rest of the government doesn't quite grok it yet.
Well, I mean, like, you wonder, do they not get it, or do they just know? Maybe they just don't care. Like, I mean, you can't be that silly. I don't want to use the word stupid.
Oh yeah,
so I'm trying to use the word silly, but like. I mean, maybe they just don't care because they just care about the like short term. I mean, they probably have their personal finances in order. They wouldn't do this with their personal finances, but when it comes to kind of the state finances, maybe they do know that this isn't a long term good solution, but they're just trying to. But short term for them, if it wins them elections in the short term, that's the path they choose.
I reckon you've hit the nail on the head. It's the like the 4-year election cycle. Most politicians knowing they're only going to be in office for 4 to 8 years, and so every decision you make is really about kind of keeping everyone happy just for that short amount of time. And of course, most politicians leave government with a lot more money than when they came in, and their salaries aren't indicative of where that money comes from. So a lot of that's networking and backroom deals and everything else, which is most of that stuff's completely legal. So it's not like they're doing anything bad in the eyes of the law. But at the same time, I think you're right. They have their personal finances in order. They have incentives to kind of kick the can down the road. And then it just kind of happens repetitively. Broken incentives, I guess.
I just have one quick thing to add. So it was also in Germany. I just read an article just before, and from ING, the bank. And so in Germany, the official inflation figure was also similar, around 7.5% for April. But there was also they put the perceived inflation by kind of questioning consumers, and the perceived inflation was 14% in Germany. So I don't know exactly how those figures are compiled, but it was interesting that the actual perceived inflation was much bigger, double than the actual official inflation. And to be honest, I question some of these official figures. I reckon they're a bit kind of manipulated to make them look lower. I trust the perceived number much more.
Absolutely. Yeah, I know when they say things like Australia's around 2, 3, 4.5% inflation, most people, if they're buying things like meat and fuel or houses or other store of value assets, they're saying, oh, actually inflation looks like it's more like maybe 30%, which is a huge 10 times more. But that would be probably what the perceived is. Good point.
Next piece of news we have here is, so the president of El Salvador announced 32 banks and 12 financial authorities will meet in El Salvador to discuss financial inclusion, digital economy, and banking.
I found it really interesting that it was 44 countries, whereas when the Bretton Woods Accord started, that was also 44 countries that met in New Hampshire. So I'm not sure if that just coincidentally happened. It seems not, like there's a lot of Easter eggs in terms of numbers and numerology in Bitcoin. So it would make sense if President Bukele decided to make sure there was 44 there. That way there was a bit of a parallel with the Bretton Woods Accord, which was 44 too. Also the fact that Davos, like World Economic Forum, World Health Organization, that's also all meeting around the same time. So this is like the Bitcoin version of Davos happening in El Salvador, which is really cool.
Well, I heard somebody describe it as the first Bitcoin meetup for nation states.
Yeah, it's pretty much the case, isn't it?
That was a cool name. And like, El Presidente, that's how he's been promoting it as a Bitcoin meetup. But I was just doing a little bit of research, and to be honest, that's actually somewhat misleading, because it turns out this is a meeting that actually has been going on for a long time.
Gotcha.
So it's like some kind of meeting that's been happening every year, and there's a rotating host each year, and it's some kind of digital finance services working group and something like that. So there's a new host each year, and this year was El Salvador's turn to host it. So the actual kind of meeting, it's not specifically a Bitcoin meeting.
Yeah, that was my perception of it too, because the way that it read was something like, financial inclusion, digital economy, banking the unbanked, and El Salvador's Bitcoin rollout. So it's not like they were there to talk about Bitcoin. They were talking about all those other things, which they probably always talk about. But good that Bitcoin's being slipped in there at the end, especially if it solves some of those things. Maybe it's led some central bankers and financial bigwigs home to go like, maybe we should be looking at this to bank the unbanked or whatever they're trying to do.
Well, usually in these meetings, the host has some influence. The host country has some influence on the agenda. So maybe some El Salvador like you said, they probably managed to kind of bring Bitcoin, the focus on Bitcoin during that meeting.
That's it. It's kind of frustrating sometimes when it gets spun as a very Bitcoin specific thing, because it doesn't need to be that way. Like we can actually say a bunch of really important, in quotations, important people met, and Bitcoin was one of the topics they discussed. To me, that's good news. You don't have to say like they met and they were just talking about Bitcoin, because once that's disproven, it makes the whole thing seem like a little bit wishy-washy. So we don't need to do that. But I guess that's media all over, isn't it? Like they want to have a story. It needs to be the most extreme story, because that gets the clicks. Either people that are keen or people that are outraged, they get the clicks either way. I guess moving on from nation state type stuff to more institutional news. So the Warren Buffett-backed NuBank, which is Latin America's largest digital bank, is converting 1% of its cash reserves into Bitcoin, and it intends to enable Bitcoin trading for their customers. So this is This is interesting because it's Latin America's largest digital bank, but it's also very interesting because it's backed by Warren Buffett. So he's not the full backer, he's one of them. But the fact that he very recently with Charlie Munger came out again to more or less say like Bitcoin's not doing anything useful for humanity. He wouldn't buy Bitcoin even if it was worth, I don't know, he gave some stupid figures. Like if it was worth $25, or maybe it was like if I could buy all the Bitcoin for $25, I still wouldn't because that would look bad for my reputation. Like he said a bunch of things similar to what he said before. We're saying Bitcoin is rat poison squared, never buy it, etc. This is also the person that I think hasn't ever bought things like Facebook or Netflix or Amazon when they were at their lowest. So probably not the most credible source of information on new technology, but at the same time, I would always come back to watch what they do, not what they say. So if he's saying, I would never buy it, but I would own a Latin American bank that's going to put its cash reserves into Bitcoin, I'll do that. Like that sounds a lot like owning Bitcoin to me, just by proxy.
Yeah. I mean, yes, he's a Bitcoin holder now.
Exactly. Yeah, whether he likes it or not. And I think that'll be the way for most people, where they will end up using Bitcoin or owning Bitcoin, whether they know it or whether they want it, because it'll just appear in their superannuation, or it'll be a payment rails that they use, and someone will say, "Do you know that was Bitcoin?" And they'll go, "Oh no, I don't like Bitcoin. I would never use it." It's like, well, interestingly enough, you are. Some more institutional news.
So so the next news we've got here is Texas Pacific Land Corporation, which is apparently one of the largest landowners in Texas, has partnered with a digital infrastructure provider and Bitcoin miner to establish a 60 megawatt mining facility in West Texas.
Pretty cool. Texas is obviously like positioning themselves as the hub of Bitcoin mining in America and maybe even the world. I found what's really cool with that news is one of those companies. So there was JAI Energy, as well as Mawson Infrastructure. One of them being the digital infrastructure provider, which I think is JAI Energy, and the Bitcoin miner being Mawson Infrastructure. Mawson Infrastructure is an Australian company, even though, interestingly, they do the majority of their mining outside of Australia, probably because of regulations here and so forth. But it's nice to see, Australian companies sort of getting amongst it in the global scene in regards to Bitcoin mining, and especially in Texas.
Yeah. Well, I've never done mining myself, but talking to miners right now and people who are involved, it seems it's actually pretty profitable right now. So so it's expanding, and even at home mining on an individual level can work.
Definitely. I do a bit of Bitcoin mining, and it's certainly profitable. I've seen a lot of different reports about how Bitcoin mining is actually slightly more profitable than just buying and holding Bitcoin. But at the same time, in the past, because I've only been into it, say, for about a year now. In the past, I didn't buy into it because I thought there was still a potential risk. Like I would rather buy Bitcoin and, if shit really hit the fan, be able to rotate out of it than buy a bunch of ASIC miners and have to, the yearly kind of contracts, etc. Whereas now it's at a point where it's so clearly being adopted by huge players that you have a bit of certainty about all that infrastructure being built up. So it's almost like it's always been profitable, but now we're reaching that point where it doesn't seem as risky anymore. Because
too big to fail.
Exactly, too big to fail, pretty much. But it's like, it's that area where it's the golden age now, where it's like a no-brainer to do maybe a bit of it, or at least to consider it. Whereas in the past, it was like, look, maybe buying Bitcoin's just safer. So something to consider. So more institutional news is Nomura, which is Japan's largest investment banking broker, is launching a subsidiary focused purely on institutional Bitcoin and digital asset products. So that would not be to their regular customers or just sort of regular citizens. It would be to larger institutions. So very cool, especially given that they're the largest investment banking broker in Japan. Moving towards Bitcoin, like a lot of people are.
Okay, so also related kind of news, but back in Australia, so apparently there's an 100% backed spot Bitcoin ETF was made available mid-May on the Australian secondary market. So I don't know much about that, but what do you know?
Yes. So during the months seem to be flying by. During March or April, there was intended to be 3 spot ETFs made available in Australia. Now, they're not actually Australian ETFs. One of them's a Canadian ETF and the other one's an American one, or 2 of them are American ones, sorry. It's also not just Bitcoin. There was a Bitcoin one and an Ethereum one, and I think the other one was a Bitcoin one. Either way, they were set to release, and then they ended up stopping like right at the last minute because there was what's called like a prime broker, which is like a market maker. They didn't have the capacity to deal with probably the volatility and probably the kind of volume that they were going to get. So it was all paused at the last minute. However, a couple of weeks on, here we are now. They've actually been made available. So these aren't, again, Australian ETFs, but they're available to Australian customers through our CBOE or the CBO, I think it's sometimes called, which is our secondary market. If anyone's traded stocks, they know the ASX is the primary market and the CBOE is the secondary. What is good news from this as well is not only is it now available to people to invest in Bitcoin through things like regular, like a stock exchange or their self-managed super fund or just a super fund, there will be more Australian ETFs issued soon. So there's like Beta Shares and Van Eck trying to push their own Australian spot ETFs for Bitcoin, among other digital assets. So yeah, this is kind of like a false start last month because we had this as news to say like, there's going to be 3. And all of a sudden it's like, no, there's not going to be any. And now we're back and now there's at least 1.
So basically it will mean people will be like different funds and institutions and investment funds can invest in this.
Yes. So
it won't be open to direct to consumers.
Oh, no, this will be open directly to consumers. Yeah, sorry. What I guess the difference is though, like you're buying backed Bitcoin, like you're buying a share that relates to a Bitcoin, but at the same time, there's a management fee normally with ETFs, so you're paying like 1.5% per year. You don't get to hold the keys to that Bitcoin itself. So
of course,
I think for institutions, that'll be fine for them because that's probably how they manage most of their assets. But for individuals, even though it's available to them, I would say this is probably not the best offering. Individuals are, in my mind, better off going to an exchange to buy Bitcoin, which they always have been able to do. But I guess the cool part about this is institutions who probably were unable to do that due to regulations or due to different agreements they have in their own organization could now quite likely buy Bitcoin if they wanted to, because it's all seen as quite more credible, I guess, given that it's on one of our at least secondary markets.
So is this confirmed? Because there's often, like you said, with ETFs, I've been hearing that stuff for years. And
it is confirmed.
This is confirmed. This is going to happen.
Definitely. So not only have I checked this with various news outlets, but also through having my self-managed super through ComSec, I'm getting a bunch of spam emails about, Bitcoin, and probably because they know I've got something to do with Bitcoin. So, but yes, this is definitely confirmed. It's available now. It was actually available about a week ago, if I remember right. So if you wanted to buy an ETF of Bitcoin, you can, but I would suggest you just buy Bitcoin.
Yeah. I mean, it's the best thing is you want to hold the Bitcoin in a wallet you control. And like, that's what we do at Hardblock. But I guess you could make the case that the second best option is to do it through something like this. You don't control the Bitcoin directly, but at least you still have some exposure. So
absolutely. This could be a way around people who have set up, say, a self-managed super fund who didn't have Bitcoin and cryptocurrencies written in there as a thing that they can buy. Always talk to your accountant, obviously, but this to me seems like a way that you could then incorporate it into your super because you're not holding Bitcoin directly. Whereas if you wanted to hold Bitcoin directly, you'd need to have that written into your fund strategy and your fund. I think it's called like the memorandum of understanding or agreement. So this is like a way around that, perhaps in a legal way, of course. Or if you just have a standard superannuation account, I would imagine this ETF will now be available to standard superannuation accounts, which is very, very cool. Never before have we had that in Australia. So
cool.
A bit more Australian news is the Australian Tax Office, similar to previous years, have said that they're prioritizing Bitcoin and cryptocurrency capital gains tax reporting. So I remember there being something a year or two ago where they said they sent out an email or a letter to about 100,000 different Australians saying that they think that they've been underreporting their cryptocurrency capital gains. And I think they said they're going to do the same thing again this year. It's not new news, but I figured this might be just a really good point to talk briefly about perhaps what we do personally to manage that to a certain degree. Like I'll jump into what I mean and kind of help you. So like I have Bitcoin that I'm saving for the long term, and I have Bitcoin that I have set aside to spend. So maybe to give to other people when we go to meetups or to buy things at the BushBash or whatever it might be. And so the long-term stuff, really, there's really no implication there. I buy it, I hold it, I don't sell it, which means there's no capital gains tax implication. Super easy.
Yeah.
My intention with that actually in the fullness of time, whether that's 5 years, 50 years time, is to probably get loans against that Bitcoin rather than to ever sell it, which means that savings Bitcoin, I don't need to worry about capital gains tax at all. Now, the spending Bitcoin, however, there's a few stipulations that make something for personal use. One is that you're disposing of it, which means spending it or selling it at a very similar price to when you bought it. You're disposing of it relatively soon after you bought it, and it's less than about $10,000. Now, I don't know if that $10,000 is per transaction or per year. The amount that I'm spending with Bitcoin,
I think it's per year, I believe.
That makes the most sense. Because otherwise, you could use that as a pretty big loophole, I think. So I guess keeping those things in mind, and of course, if you want specific advice, talk to an accountant. But what I do in that regards is I make sure that my savings and my spending Bitcoin are kept very, very separate to the point where if I put a transaction into, say, Hardblock on my bank account, I actually label it for personal use. When I withdraw it, I'm withdrawing it to a separate wallet with a separate seed phrase and passphrase that's just for personal use. That way, it's somewhat easier to track. But also it's quite clearly separate. The benefit, I guess, of doing that is that if you dollar cost average, you're actually buying Bitcoin at various prices. So when you go to, say, spend it, it's up to you to decide which Bitcoin of your personal use spending Bitcoin you're actually spending, which means you just choose one that you've bought very recently and you choose one with a price that's similar to what you're spending it at. And that lets you have some spending Bitcoin that doesn't have capital gains tax implications. And my way of tracking this is to just keep a basic Excel spreadsheet. It's not that difficult to do. And as long as I kind of keep up to date with it every month or so, it never becomes this runaway train in terms of record keeping. I'm just curious to know.
I do more or less something similar. I have a separate wallet for spending and separate kind of for holding, and the spending, I don't even get anywhere close to 10,000. It's pretty small. So I don't know if it would even come in a whole year, if it would add up to $500. So it's not very big. So I think everything should be all right with that. And the holding, luckily with holding, the taxes becomes much easier.
It does.
So, maybe occasionally I might sell some or something or buy some, but it's not a huge amount of transactions. So I don't use any tax services to help with Bitcoin or crypto tax. And my accountant, he's not super, he knows the basics, but he's not some kind of specialist in Bitcoin. But because I'm just holding, it's nothing that complicated. So
makes it easier, doesn't it?
It makes it easier.
Same circumstance for me. I don't like the spreadsheet that I keep. I don't put that through any kind of other service to try to make sense of it. It's easy enough to make sense of it myself. And say my accountant is kind of up to scratch with Bitcoin. His brother owns some Bitcoin, but really if I gave him a trading sheet with 1,000 or 5,000 trades, I don't think he'd want me as a client anymore. Or if I was spending a lot and having to justify it all as personal use, I think that would get a bit dicey. But the way that I've got it, which is relatively simple, the way that I've just described, that works well for him.
But again, we also know I'm not an accountant, so
I know you have disclosures. This isn't technical advice. This is what we do personally and what you might want to consider discussing with your accountant if you want to do something similar to that. And of course, if you got a letter from the ATO or you read that headline and thought, oh shit, am I doing this the right way? If you're doing it similar to us, I would say you're probably going to be comfortable in your position. However, what I'll do is I'll link to a fact sheet that was developed from the ATO's guidelines about, what constitutes purchase, sell, what you should be keeping records of, for how long, what is personal use, what is capital gains inclusive. So I'll link to that. It's only about 2 pages. It's really relatively easy to read and quite handy to get your head around this stuff.
So the next piece of news, which is very interesting and I think good for Bitcoin, is China has revived as the second biggest source of mining. So there's been some mining data released by Cambridge Center for Alternative Finance. And they showed that China is back, has had a resurgence as the second largest mining hub at 21%, behind the US, which is at 38% now.
It's probably not surprising for people that have been following the China bans, because I think this was the 8th ban in the last decade or so, and each ban prior to it, I don't know if you would say they've even been overturned. They're just kind of dissipate, and all of a sudden it's like China's there with transactions or holding Bitcoin or mining Bitcoin. I also knew that there was a couple of autonomous zones. I say a couple, actually, it's one, and I don't have the source here to say which one it is, but there was one autonomous zone in China that was allowed to mine Bitcoin, but they had to pay an additional rate on top of the kilowatt hours. It was an actual, like, just 1 or 2 cents more. So that made me think, and I heard about this about 3 or 4 months ago, it made me think they're probably pilot testing it in certain areas, and they're probably allowing miners to keep running that are maybe like jurisdictionally located outside of China. Because I don't know exactly how this works. If they have really banned mining in China, it's crazy that they still have about 21% mining of the network. And I imagine maybe that's state-sanctioned mining, or maybe it's miners that are located, in other countries, but they're still Chinese miners, like in terms of their affiliation.
Yeah, it's interesting it'd be interesting to know that. What you say could be true. Some of the stuff I read is that actually some of the miners are just hiding it, like they're doing it behind VPN, kind of on like a black market or whatever. And China is a huge country, and it's probably the officials have a lot of stuff to do, and this is probably not the highest priority. And but basically miners are mining behind VPNs and things like that or whatever to like hide the exact location, and doing this kind of things kind of underground, doing the mining underground in that sense. That's what I heard.
When the ban first came out, and I think you're probably right, and there's probably a mixture of these things.
Yeah, probably a mixture,
Because I would not be surprised if eventually it came out that the Chinese government were mining Bitcoin themselves in like state institutions or something along those lines, as well as having their own private institutions that are backed by the government, etc. But you're right, there's probably a lot of guerrilla mining going on. But I remember when the ban first happened, there was a couple of videos that got released of apparently in China, but it's hard to verify, someone that had set up a bunch of Bitcoin miners more or less in a cave, and there was like a waterfall that they were using the hydropower to power their mining. And it was just like an example of, this can happen even if a country bans Bitcoin mining. Bitcoin will find a way to route around, whether it's with mining, whether it's with transactions. So I guess it's nice to know Bitcoin is still sort of an immovable object in that regard. And either way, China's still up there in terms of their mining power. Hash rate.
Yeah, I agree. I think that's why I said it's good for Bitcoin, because mining is much more centralized when the actual node network and the transactions. So like, if you want to ban people actually holding or spending Bitcoin, that's pretty much impossible. Like if you got a wallet in China, like a Bitcoin wallet in China, you've got a Bitcoin, nobody can stop you. So that wasn't even, the Chinese government didn't even attempt to do that. They just attempted to ban the exchanges and the mining. But if they can't even ban mining properly, and that's a pretty centralized authoritarian government in China, but even they can't ban the mining properly. Like, that's good for Bitcoin because it shows its resilience.
Absolutely. And I think it's very telling for other governments that you probably shouldn't try to ban something and then have to walk back that ban, months or years later, or to have the ban there, but then to have data coming out saying it's almost like there is no ban at all. It's very silly, and it shows that there is no power over something to ban it and then have to walk it back. So I think this is telling for other governments as well how to deal with Bitcoin. Banning it certainly doesn't work because most governments aren't probably as totalitarian or authoritarian as China. So if they can't do it, especially with, like you say, the centralized nature of Bitcoin mining, or at least the more centralized nature than, say, running nodes for personal use. That's a good demonstration for other countries as well. I guess final bit of news here under the sort of technical category is there was a article released by Shinobi, which is all about how BIPs, which are Bitcoin improvement proposals, are implemented. This has probably come up in relation to BIP 119, which I won't talk about in any detail on this podcast because we've already covered it in the most recent podcast. If it's not the most recent one, it's the one before that. But basically, there's lots of confusion over how do we, after we reach some sort of consensus, implement Bitcoin improvement proposals. So you might have heard of terms like miner activated soft fork, or MASF, or user activated soft forks, or UASF. Even more recently, maybe a new thing called a user-resisted soft fork, or URSF. You might have even heard of things like speedy trial, which is to do with miners signaling whether they support an implementation or not. And that I mean, it's all very confusing. So I would say if you don't know what those terms mean and you're keen to know how things get updated onto Bitcoin, check that article. I'll link it in the show notes. However, just for the sake of discussion about this point, I was curious. Maybe I'll put out my opinion and see sort of where you stand on it too. This whole conversation around Bit 119 and implementation, and even past implementation conversations around like Taproot and then SegWit, have made me think, well, what is the best way that Bitcoin should implement something? Who should be the ultimate deciders? Because sometimes, there is a thought that I've had of saying, well, look, developers are probably the most equipped to know what's going to be good for Bitcoin, perhaps, and they can inform users, and really miners should be serving users. However, there's been a bit of a shift recently, I feel, in terms of the culture of making it seem like miners actually have a very big say in what happens. Maybe they should, I don't know. My personal opinion is like miners serve the network. The network is the nodes, the network is the users. The developers are to some degree working on behalf of the users as well, and they can kind of be a bit of a liaison to help users understand some of the more technical parts of it. But I guess what I would like is that the users have the final say of, do we implement something or do we not implement something? So using a user activated soft fork might be the best way forward. Like, I don't know. And maybe there's a bunch of other options here that we haven't considered yet. But I would say once we've reached some sort of social consensus where most miners, most developers, most users seem to say like, this is something that's going to be good for Bitcoin and there's no real bad risks to it, it should then be up to users to then signal and sort of push the activation. Because if we have developers or miners, which are a much smaller cohort, signaling and pushing for the activation, it creates this culture where then people, especially new to Bitcoin, will maybe start looking to developers and miners to say, well, what do they think? What do they want? And it takes the power culturally away from the users. And then this is something that maybe if we keep going down that route in a few years' time, or even in a few months' time, maybe we just look to developers and just look to miners to decide what happens with Bitcoin, which is, it's kind of against the ethos of Bitcoin, in my mind at least. But where does that all sit for you?
Yeah, I think some of these things are pretty complicated and there's not an easy answer. But I think I tend to agree with you. I mean, users have the ultimate power, like in terms of ultimate power, like to make a change. If the users running the nodes don't change, then the network doesn't change, or there will be a split. And so that's kind of where the ultimate power is. So I guess I would tend to think that the activation mechanism should reflect where the actual ultimate power is. I mean, there's other counter arguments to it. I think it's a complicated discussion. I don't think there's a simple kind of answer, but probably makes it, if we have a user activated soft fork, it probably does kind of makes it a bit complicated to make a change, because sometimes users might simply not be against a change, but they simply don't keep up.
True.
Don't follow all the latest details. And while they have an ultimate power, sometimes they're happy for the developer to just decide, because I think the developers would make the best decision.
As a point there as well, is that a user activated soft fork is kind of misleading too, because most users don't design their node. So they're downloading a node software package built around Bitcoin Core, of course, from other groups. And those other groups generally can set whether they're going to signal or not signal towards something. So the majority of users who are not really aware of that or care about that or paying attention to that would just be voting in the way that their node developer wants them to vote, if that makes sense. So even the idea of a user activated soft fork, I would love to see some stats to say like, all right, we have, because I've seen anywhere from like 50,000 nodes to 150,000 nodes. How many of those are, individual people that are kind of paying attention and want to have a say, versus how many are just running nodes and will hit the update button as soon as an update comes, which means that they're really just getting whatever their node developer has decided to set in the code. So even, you're right, a user activated soft fork is more complicated than that. It's not like there's always conscious users behind that clicking, yes, I agree. And you're right, some might even not vote. Some might still be running outdated software, which you absolutely can do on Bitcoin, which means that they don't vote for it. But then that gives the impression that they're not supportive of it. But maybe they're not aware of it, or they don't care. They haven't kept up with it. Complicated.
I think it is complicated. Maybe even I'm thinking maybe we can do a future episode. Maybe invite a guest who knows these things a bit more, and
absolutely
have that discussion about that.
Definitely.
But, yeah. To be honest, I'm not the right, like, I know a little bit about this stuff, but it does get pretty complicated, and I haven't been following the latest debates, so I don't want to comment too much because I could probably say something that's incorrect.
That's fair enough. It's look, and on something like this, no matter what opinion you have, you will piss off at least about 20 to 30% of the others. I'm happy to have that opinion. I think users should be the ultimate deciding power, but I do realize the nuance. It's not always as simple as like anyone controlling a node is a user and they know exactly what's going on. But I guess where this conversation started is that article from Shinobi, which talks about like what are the ways of activating. And if you're just keen to know about that, go have a look at his article. He does put what his opinion of Bitcoin's implementation protocol should be, but that's again his opinion, and he's very clear to make that known that that's just his personal opinion based on his years. But have a look if you're keen to know more. Otherwise, I think we'll leave that topic there. And you're right, maybe we'll get an expert on and talk about some of the nuance. I think knowing some of the history as well of all the previous implementations is good to kind of know how each of these tends to play out.
Yeah, sounds good.
No worries. Well, we'll end it there. Thanks everyone for listening. Thanks Daniel for your time.
Yeah, thanks Justin.
If you've got any comments, please reach out on hardblockbtc on Twitter. Otherwise, again, thanks for listening, and until next time.
See you. Bye.